Financial education is one of the most important steps you can take on the path to financial freedom. But what is financial education and why is it so crucial for building wealth? Put simply, financial education is the process of learning about personal finance and how money works. It includes everything from budgeting and saving to investing and retirement planning. So, why is financial education so important? For one thing, it can help you make better financial decisions. When you have a solid understanding of personal finance, you're less likely to make mistakes that can cost you money in the long run. You'll be better equipped to create a budget, save for the future, and invest your money wisely. Financial education can also help you avoid common financial pitfalls. For example, you'll be less likely to fall prey to scams or make impulsive purchases that you can't afford. You'll also be better prepared to deal with unexpected expenses or financial emergencies. So, how can you gain financial education? There are many ways to learn about personal finance, including reading books, attending seminars or webinars, and working with a financial advisor. You can also find a wealth of free resources online, including blogs, podcasts, and YouTube channels. In short, financial education is essential for anyone who wants to achieve financial success. By taking the time to learn about personal finance, you can make smarter financial decisions, avoid common mistakes, and build the foundation for a secure financial future. Key point 2, the difference between assets and liabilities. One of the most fundamental concepts in Rich Dad Poor Dad is the difference between assets and liabilities. So, what are assets and liabilities, and why is understanding this concept crucial for building wealth and achieving financial freedom? Assets are things that generate income and have value that can appreciate over time, such as rental properties, stocks, or a business. Liabilities, on the other hand, are things that drain your income and have no value appreciation, such as credit card debt or a car loan. The key difference between assets and liabilities is that assets put money in your pocket, while liabilities take money out. In other words, assets are things that work for you, while liabilities are things that you work for. Understanding this concept is crucial for building wealth and achieving financial freedom because it helps you focus on acquiring more assets and reducing your liabilities. The more assets you have, the more money you can generate and the closer you'll be to financial freedom. The fewer liabilities you have, the more money you'll have available to invest in assets. So, how do you acquire more assets and reduce your liabilities? One strategy is to focus on building income-generating assets, such as rental properties, stocks, or a business. This can involve investing in education, networking, and taking calculated risks. To reduce your liabilities, you may need to change your spending habits and focus on paying off debt. This can involve creating a budget, avoiding unnecessary expenses, and paying off high-interest debt first. Key point 3, the power of passive income. In Rich Dad Poor Dad, Robert Kiyosaki emphasizes the importance of generating passive income as a means of achieving financial freedom. So, what is passive income and how can it help individuals achieve financial independence? Passive income is money that you earn without actively working for it. It's income that comes in regularly, even when you're not actively working or trading your time for money. This can include rental income, dividend income, interest income, and royalties from intellectual property. The power of passive income lies in the fact that it allows you to generate income without being tied to a traditional job. This means that you can have more time and freedom to pursue other interests or invest in additional income-generating opportunities. There are several ways to generate passive income, such as rental properties, dividend-paying stocks, or creating digital products such as ebooks or courses. Each of these methods requires upfront investment, but the potential rewards can be significant. For example, rental income from a property can provide a steady stream of income each month, while dividend income from stocks can provide regular payouts without selling the stock. Over time, passive income can grow exponentially, leading to financial independence and the ability to retire early. It's important to note that generating passive income isn't necessarily easy, and it often requires significant effort upfront. However, the benefits of passive income are well worth the investment. By creating multiple streams of passive income, you can build a solid foundation for financial freedom and achieve the lifestyle you desire. Key point 4, the mindset of the rich. One of the key takeaways from Rich Dad Poor Dad is the importance of adopting a mindset that is conducive to building wealth. So, what distinguishes the mindset of the rich from that of the poor and middle class? The rich think differently about money, assets, and opportunities. Rather than seeing money as something to be spent, they see it as a tool for creating more wealth. They also understand the difference between assets and liabilities and focus on acquiring income-generating assets, rather than accumulating liabilities that drain their resources. The rich are also more willing to take calculated risks and think long-term. Rather than seeking immediate gratification, they invest in opportunities that may not pay off for several years but have the potential for significant returns. They also prioritize education and personal development, recognizing that their mindset and skills are critical for building wealth. To adopt a rich mindset, it's important to start thinking differently about money and opportunities. This may involve challenging your existing beliefs about money and shifting your focus towards acquiring income-generating assets. It may also involve taking calculated risks and investing in opportunities that have the potential for significant returns. Another important aspect of adopting a rich mindset is prioritizing education and personal development. This may involve reading books on finance and investing, attending seminars or workshops, and seeking out mentors who can provide guidance and support. In Key Point 5, the value of taking risks. Taking risks can be intimidating, but it can also be a key driver of financial success. Rich Dad Poor Dad emphasizes the importance of taking calculated risks and exploring new opportunities to build wealth. But why is taking risks so valuable, and how can you manage risk effectively? First, taking risks can lead to greater financial rewards. Investing in opportunities that have the potential for significant returns can pay off in the long run, even if they involve some initial risk. By contrast, playing it safe and sticking to low-risk investments may limit your potential for growth and financial independence. However, it's important to manage risk effectively to minimize potential losses. This can involve doing thorough research on any investment opportunity and diversifying your investments across different asset classes to reduce the impact of any single loss. It's also important to set realistic expectations and have a long-term perspective, recognizing that any investment involves some degree of risk. Fortunately, there are many examples of how taking calculated risks has led to financial success for others. Many entrepreneurs have built successful businesses by taking risks and pursuing opportunities that others overlooked. Similarly, investors who are willing to take on some risk and invest in emerging technologies or new industries have seen significant returns over time. With a long-term perspective and a willingness to take calculated risks, anyone can achieve financial freedom and create the lifestyle they desire. In summary, Rich Dad Poor Dad is a powerful book that has helped millions of people achieve financial success. By exploring concepts like financial education, the difference between assets and liabilities, the power of passive income, the mindset of the rich, and the value of taking risks, the book provides a roadmap for building wealth and achieving financial independence. Thank you for watching, and we hope you found this video helpful. If you enjoyed this content, please consider subscribing to our channel for more educational content like this in the future. Thank you, and we'll see you in the next video.